It's important to note that the Reserve Bank of India, RBI, and SWIFT network serve different purposes in the financial system. RBI is the Central Bank of India and is responsible for monetary policy and regulation of the banking sector in India. SWIFT, on the other hand, is a global messaging network that facilitates secure communication and settlement of financial transactions between financial institutions. RBI's Digital Rupee initiative aims to create a digital version of the Indian rupee that can be used for peer-to-peer transactions, payments, and other financial services. The initiative has the potential to provide an alternative to traditional payment methods and reduce dependence on foreign payment systems like SWIFT. However, it is not a direct competitor to SWIFT, which serves a different function in the financial system. SWIFT's messaging network is widely used in international transactions and is the dominant platform for cross-border payments. It enables financial institutions to exchange financial information securely and efficiently, facilitating settlement of transactions in different currencies. SWIFT also provides a range of compliance and regulatory services that are essential for cross-border transactions. In summary, while the RBI's Digital Rupee initiative has the potential to provide an alternative to traditional payment methods and reduce dependence on foreign payment systems like SWIFT, it is not a direct competitor to SWIFT. The two serve different functions in the financial system, and it is likely that they will continue to coexist and complement each other in the future. It is worth noting that while the RBI's Digital Rupee initiative and SWIFT serve different functions, there could be some overlap in their usage. For instance, if the digital rupee becomes widely adopted in India, it could potentially be used for cross-border payments as well, reducing the need for Indian businesses and individuals to rely on SWIFT. However, to compete with SWIFT on a global scale, the digital rupee would need to gain widespread adoption internationally, which could take many years and require significant investment in infrastructure and partnerships with financial institutions, regulators, and governments worldwide. Moreover, SWIFT has a well-established network of partnerships and relationships with financial institutions and regulators globally. These partnerships have helped to create a global standard for cross-border transactions that is recognized and trusted by market participants. Building similar partnerships and relationships with the Digital Rupee initiative will require significant investment and effort. Finally, it is worth noting that SWIFT has been around for many years and has evolved to meet the changing needs of the financial industry. It has continuously updated its messaging network and added new services to address emerging challenges, such as cybersecurity and compliance. The RBI's Digital Rupee initiative will need to similarly evolve and adapt to address emerging challenges if it is to compete with SWIFT on a global scale. In conclusion, while the RBI's Digital Rupee initiative has the potential to compete with SWIFT on some level, it faces significant challenges and obstacles to gain widespread adoption and compete with SWIFT on a global scale. Nonetheless, it represents an important step towards modernizing India's financial infrastructure and increasing financial inclusion. Another important consideration when comparing the Digital Rupee initiative to SWIFT is the role of blockchain technology. Blockchain is a decentralized, secure, and transparent technology that can be used to create digital currencies and facilitate secure and efficient transactions.